Hey everybody, Colby Valenta here with Valenta Capital Management. Here we find ourselves in October. 9 months down, 3 to go. I hope everybody's feeling okay. Gosh, I feel like we're, in the upper late rounds of a prize fight trying to get through this year. So wanted to touch base with you guys, kind of let you know what's going on, what we're seeing, some of my nerdy stats to, lighten the mood and all that fun stuff. So just know that number one, first thing we want everyone to know, you're concerned and we haven't spoken, let's have a conversation. We have done tremendous work with a lot of you to not only mitigate risk, but to have income plans to deal with what we're living in. Whether it's inflation or whether it's volatility or taxes or whatever, we've put quite a bit in place with a lot of you to help you handle what's going on a little bit better than if you had no protection or no income planning. So if you've not done that, or if we've spoken about that with you before, but just never done anything, and you're curious, or you're worried, or whatever it would be, we want to talk to you. We want to help as much as we possibly can. A question that we've been getting quite a bit though lately is, when's it done? When's it going to be over? What's your opinion? When? Gosh, tell me. Man, I wish I had a lovely, crystal ball that I could talk to and figure out. And we know that we don't know that. Gosh, if we looked at the beginning of 2020 to where we are today and we said, hey, you're going to deal with all of these things, I don't know if anyone would have believed us. So what do I look at? I kind of look at stats to see where we are. And again, stats are stats. They're numbers. You can make them say what you want to a degree, but I think that it's useful to hear how we've kind of navigated prior seasons like the one we're in right now. So the first one to take a look at is, hey, what if you are out of the market for even a short period of time and then try to get back in? So what we see here is, if you look at the S&P 500, December 31st, 2006 through December 31st of 2021, if you had just put your money in an index fund and you kept that risk the entire time, you would have averaged a little over 10%, which is wonderful. If you are out of the market for the best 10 days total over this time frame, your average rate of return gets cut down to half because you missed 10 total days. And we've had that conversation quite a bit, but what happens if you miss 20 total days? If you missed the 20 best days in the stock market over that same time frame, your performance is now under 2%. You're averaging around 1.59% because you missed 20 days over this time frame. But what about 30 days? What if you missed the best 30? And I think you get the point now, but if you missed the best 30 days, you now have a negative average for that same time frame because you tried to get in and out. So that is why we have a plan. We have a plan. Money is in the market to deal with short-term fluctuations, hopefully complemented by additional things. But how do investors feel, generally speaking? So one thing that we do is I like to see what surveys say, and there's one, the American Association of Individual Investors. This is the third most bearish reading they've ever gotten. We're talking Black Monday in '87 and '08 numbers. So that's kind of where we are right now. The general public doesn't feel great. Where do we go? What do we do? How much longer could this go? That's another question that we've been getting, right? As I'm shooting this video today, year to date, the S&P 500 is down just over 20%. If we look at averages, though, we look at all of these bear markets that we've had in the past, the average shows just under negative 33%. So, not saying it will go there, but some people have been asking, is there more room to go down? Yeah, if I look at stats and the averages, there is. It also shows us that these bear markets typically will average 367 days in length. We're not there yet either. So we look at this and go, maybe there is more room to run. And we got to also speak to the volatility that we're seeing. This year, 1 out of every 4 trade days, the S&P 500 has moved 1%. Up, down, whatever. That's the 4th highest reading of all time for a year. So we've got volatility. We've got inflation. We've got rising interest rates. We've got an economy that we're just uncertain about. Just know there are protection strategies. There are strategies that give you good upside and protect you from some of the downside to complement things that have total risk. But if you're not doing holistic financial planning and you're not doing income planning to see what your life might look like, because 10 years from now, we might deal with the same but different, similar, let's say, situations. Taxes might be up, volatility might be back, inflation might be back. How do you deal with it? And what might you be able to do now to help control that to the best possible ability in the future? That's what we do here. That's what we want to help you with. So if that's something you're interested in, or you just want to chat, revisit your plan, whatever it would be, give us a call, 303-951-5975, or visit us online. Have a good day.